So at what age you actually started your investments?
If you look at it from January 2024, then most of these thematic or sectoral funds have a drawdown of more than 10%. According to me, volatility is not a risk.
I am not looking at your starting investment with me. I am looking at the next 3 generations. At this moment, if I ask you, how successful are you? Hi Nirmay, welcome to my podcast.
Hello, Anthony. Pleasure being here.
This conversation is about your life, how you understand the industry, especially the distribution industry, as a youngster. So, I basically, when I start, I wanted to know about your education, because what I came to know is you studied in University of Warwick.
That's right.
And accounting and finance.
Yes.
And then you also completed your CFA.
Yeah.
Okay, so you studying abroad for so many years, and that's a different culture, totally different culture.
Quite a different culture. You meet a lot of people from different countries, different backgrounds, different walks of life, and you live on your own independently. You have to do things on your own. Here you're with your family, so
Yes,
and the kind of culture over here is also very, very different. We have maids for everything, your support for everything. Rather, there everything has to be done on your own.
Indeed. I was actually coming to that. So even my son is there in studied in UK. So I basically wanted to understand, how did the transition took place? See, studying abroad, most of the youngsters prefer to stay there and continue their life as it comes. Whereas in your case, you took absolutely 180-degree opposite decision. Foreign bred, foreign educated, coming to India and facing the entire, not so organized situation here. How did you manage that?
So for me, I think since the beginning, I was quite clear that long term, I'm going to come back to India only because the growth potential that I see over here is much, much superior, much higher, much more exponential compared to the West, specifically the Europe. But I was at the same time clear that for a couple of years, maybe for bachelor's, if I hadn't gone for bachelor's, then maybe I would have gone abroad for my master's. But since I went there for my bachelor's, I was sure that yeah, I'll go there, थोड़ा देखेंगे उधर independent होंगे, learn about the culture over there, meet different people, as I said, and also learn about finance. Obviously, the basics of finance investments are the same if you study from India or from the UK or from the US. But ultimately, it is the network that you create, as I mentioned, the people that you meet, the professors that you meet, the pedagogy methods and everything. That is what I wanted to experience and live a couple of years on my own. So that was the thought process for going abroad after my schooling. And as I mentioned, then I was very clear कि फिर तो इधर आना ही है. And I wasn't sure, that I was rightly gonna come back over here and then do my CFA and start the business over here. That was actually something that happened because of the COVID pandemic. So, yeah.
Okay. That was a very big lesson that we all learned. The possibilities of doing even at such situations is highly probable.
Correct.
We always thought, when we are constrained, we don't do it. But then, even at such situations, also we can actually flourish. We can find a way out. So, if I have to ask you, was this succession plan in place, or you were anticipating it?
Yeah. So, I mean, to be frank, since the last couple of years, last many years rather, I would say last 10, 12 years, my dad was always, teaching me a bit about finance, investments and all. But to be frank, since the last 6 to 7 years, I wasn't in a situation to understand all of that, get that much clarity or understand it with that much confidence and be clear that yeah, this is something that I want to do. I was always interested in it. It always kind of inspired me, the kind of numbers that my dad used to tell me and the kind of opportunity that was there in this field. But and in that way, definitely that succession planning was obviously there in his mind. But when it comes to my mind, or and whether I'm gonna get into his footsteps, do that same thing, that was something not very much fully planned, rather I would say, and I took it with the flow. Okay, gradually मैं करूँगा. I wanted to go into that, but once I learn about it, once I get that clarity and confidence, and definitely this is something that I'm gonna do.
Yeah. Mostly you thought about whether will I fit into this larger than life
Yes.
no persona that your father already created. But I think you took it very well.
Yes, thank you.
Yeah, that's what I feel. I know every time I hear about you, I feel like you have taken no the weight on your shoulders very well. Though you're very young, I know. Uh, but most youngsters who refuse to join their ancestral business, or say join as a second generation,
Right.
they find it very difficult to. I said my own kids are in the same league. They simply refuse to accept the fact that one day they need to run my business or my company. But uh, if you can give a tip on that aspect.
I think it's a privilege, rather, I would say, to continue the legacy that someone has built for you. That's how I would, take something out of that. Or instead of just, thinking that ये तो मेरे dad ने start किया है, या मेरे dad के dad ने से, for example, start किया, and I'm just too lazy to start something new or do something on my own and just join that. I think that is not the right way to look at that. Rather, taking that legacy ahead, and then understanding and trying to deliberate how I'm gonna multiply it to, let's say, 10x, 20x, 100x, 200x, or 1000x from here. That is the right attitude that we need to have. And if we have that in place, definitely, the things that we need to excel in that field, I think that is there in our genes. Because if your dad has done it or his dad has done it, then definitely that is going to get passed in the DNA.
Yes.
So you just need to have that conviction and confidence, and the right mindset, rather, I would say.
A different pedigree.
Yes.
Okay, so you took the legacy part very easy, and you also took it in a way so confidently. The numbers that you said, 10x and 20x and 100x. I sometimes get surprised. Even my team gets surprised when I talk like this. 10x, 20x is nothing, which we can achieve that. But how do you manage this kind of numbers so easily? Because the body language that you just shown speaks about you are fully immersed in it.
See, so it is very simple. I just believe in the simple rule of 72. And 72 divided by anything, that's the rate of return, or that's the growth of compounding. So say 15% if I take, then roughly every 5 years, and whatever that asset is or whatever that value is, it is gonna double, right? If we talk about the mutual fund industry, it is about at 67 to 70 lakh crores. Let's say, for simplicity's sake, let's assume 70 lakh crores, right? It has compounded. The assets under management over the past 10 to 15 years have also compounded at a rate of anywhere between 18 to 20%. Over the last 5 years only, indeed, we've seen that the assets have grown from about 25 lakh crores to about 66, 67 lakh crores. So that is about more than 2.5 times, which is about 20% CAGR. Now, going ahead 15, 20 years down the line, with just 5 crore investors in place, right? A population of 150 crores, 50 crore plus bankable Indians, then, and definitely a 15% CAGR is the bare minimum. Today we have an SIP book of more than 25,000 crores. So at 25,000 crores, we're gonna add at least a couple of lakh crores of assets just through the SIPs every year, and doing that, even in our distribution business, our assets under management are more than 2,20,000 crores, and roughly we have an SIP book of 2,000 crores, which is about 80 basis points that of the AUM that we have. So every year, about just through SIPs as well. If we keep that 80 basis points also constant, then we are going to add at least 10% growth, in 11 to 10% growth just through our SIPs. And market, if it gives about 10-15% growth, and 25% growth is very, very much achievable. And at 25%,
Oh my God, you are actually churning numbers like no, really the algorithm processors generally do in the inside the computer. You are actually churning out numbers so easily. Is it very natural for you? Because I heard your father in the last 19 years, nothing more than 25 times by his presentation. He is also very good in numbers. So it looks like it's very natural for you to no spill out all those numbers and then say that yeah, this is what I wanted to do. Is it that way?
I mean, as I said before, yeah, probably a lot of that is in the DNA. So I don't deny that. And also, obviously, through practice, you get accustomed to it. So
Yeah. Oh.
you deal with it on a daily basis. So you get accustomed to it as well.
So when you now it is how many years in it?
For me, slightly under 3 years. So
3 years.
So I started working from January 2022. So that way it is more than 3 years now. But officially, I started my research journey with the asset management company in September 22.
Okay, in this the 3 years back, what was the asset that your father was managing?
You mean the AUM?
AUM.
The AUM of our distribution business, I think, was about 1 lakh. It was about 1 lakh 30,000 crores. I'm not sure, but
So,
yeah,
but there's a ballpark.
there's been, yeah, ballpark would be somewhere around that, maybe slightly higher than that if I'm not wrong. But a lot of growth has come in the past couple of years as well, because the markets have also shot up a lot. So that has helped a lot in the mark to market gain as well.
Yeah. Okay. So see, one of the things that you mentioned in the initial conversation is that COVID actually helped you take up
Right.
CFA, and then you invested a lot of time in studying.
Right.
I also know that you are an avid reader.
Yeah.
You and it was a surprise to know that you are not there in Instagram. Believe you me, that was a shock.
I do have an account. It's not that I've deactivated my account, but I don't log into that account yet.
Okay, so you're a typical out of the league Gen Z, right? Yeah. So after Corona, you walked into the business. So from there on, since last 4 years, we had a tremendous bull run,
Right.
and you witnessed that.
Yeah.
The exponential growth in CAGR as well as in the AUMs and SIP book. This continuous euphoria we witnessed.
Correct.
Now, since October, we are also looking at
Correction.
corrections, and that is actually taken everyone who walked into the industry thinking this is a rocket which is a shot and it goes to a different realm without ever coming into the projectile motion. So people never thought there is something called correction. In scientific way, there is a gravitational force too.
People were like, there's always going to be a secular bull run, which is not the case in the markets. Yeah.
Okay. As a youngster, how did you take that? Not as a distribution head or the director, as a young.
Right. So, I'm always very clear that, and if you look at the data as well, it is very, very clear that a bull run cannot sustain forever. There cannot be a perpetual secular bull run. A bull run has to come after, a bear market has to come after a bull run, right? A bear market has to succeed a bull run. Obviously, that is something which is a part and parcel of markets. If market goes up by 30-40% in a couple of years, then it has to come down in a couple of years so that it averages out to about 12-15%, which is commensurate with the GDP growth or commensurate with the earnings growth of the companies as well. So that rationally is very, very clear. And the rally that we have seen over the last 4 years, specifically post the 23rd March, if I'm not wrong, was the bottom 2020 of the COVID bottom, where the markets tanked by I think around for 39 to 40%.
Yeah,
Was
40%.
40 ballpark was the drawdown, and from there then we've seen by the end of 2020, 2021 last year and all, we saw markets going up to 80, 82,000, and now again coming down. So that clearly I was very much, to be honest, after a point scared. I knew that this is going to come at a point of time. So at some point of time, obviously I didn't know when it's going to come. Nobody knows that according to me. But definitely I was sure that ये आने तो वाला ही है, and when this is gonna come, this is gonna be very, very deadly for a lot of people. I was warning a lot of my friends as well, a lot of my relatives as well. Trust me, people more than twice my age or even more than that also don't understand the fundamentals of risk of equities, but they are just so much into that euphoria, as you
You're
mentioned.
pretty level-headed, that means. So, generally youngsters don't behave like that. Youngsters says, नहीं, ये रुकने वाला नहीं है. और more precisely, पुष्पा जैसा झुकेगा नहीं साला. बट अभी मुझे लगता है कि थोड़ा बहुत सबको लगता है कि ओनली वो फिल्म में चलता है, मार्केट में नहीं. मार्केट में झुकना पड़ता है,
बिल्कुल झुकना पड़ता है ना.
झुकना पड़ता है. एंड वन ऑफ द थिंग दैट आई
आप झुकोगे नहीं तो कोई और झुका देगा आपको.
Yeah, that's very well philosophical it is. So I often tell my investors कि 23 years I am still a student. अभी तक मुझे नहीं समझ में कि सेंसेक्स काम कैसे करता है. Because length and breadth of India, people are logging on to it, and anybody can actually give you a surprise any given day. And people believe that they invest about ₹1,00,000 or a couple of lakhs and then they can drive the market. Technically, that is not so.
Absolutely not.
These especially retail investors are supposed to be more studious, more understanding. They should know their risk appetite. So when it comes to risk and leverage, how do you teach your team, or how do you make your probable investors, prospective investors understand?
See, first of all, what risk exactly is, that needs to be understood, right? So people talk about risk in different ways. They talk about, volatility as a risk, a standard deviation, which is non-year volatility. But according to me, volatility is not a risk. It is just the price that you are paying to get a better return in an asset class that has delivered better return compared to other assets. So volatility, first of all, according to me, is not risk.
Why I call it ninth wonder, because
Right.
that's exactly it is. Yeah.
Right. So for me, the main risk that any investor would face in any investment is the loss of capital, right? The damage that would happen to his or her capital, and that probability of loss, that needs to be accounted for very, very accurately, and that has to be aligned with the risk appetite and expectations and the time horizon of the investor, say. Because in the short term, we know, if I just talk about Sensex, and if we look at Sensex's history, if someone invests only for a period of 6 months, there's a 33% probability of loss that his or her capital is gonna get wiped out. If they increase their holding period to 1 year, then still there is about a 24% probability of loss. So still 1/4 of the time, if you invest ₹1,00,000, you're gonna end up redeeming less than ₹1,00,000 in a period of 1 year.
1 year.
Once your horizon increases to 3 years and beyond, 3 years, I think it is about 11-12%, 5 years further less, and 10 years and below, virtually it is zero. 10 years, hardly it is less than 1%, and there has not been a single period of 12 years and above in the market, in our Indian markets.
At any given period.
At any given period, let's say you invested at any point of time, right from 1979, 3rd of April 1979, which is the inception date of
Sensex, BSE.
Udhar se leke, if you had invested for exact 12 years or more and redeemed on any date, there's not been a single period where you made losses. So that's how I view risk, specifically in terms of equity. It is linked to your horizon, it is linked to your expectations, And that is why if you have a short term horizon, if your financial goal or need is very much short term, or if your need is more liquid, then definitely you cannot put more money into equity. So that right asset allocation has to be done. So, and when I say asset allocation, it is how much you put into equities, how much you put into debt, or maybe other assets for other people. For me, I just understand
the basic ones.
Two basic ones. Equity for the growth, long-term growth and wealth creation, and debt for cushioning the overall portfolio. So that combination of the two has to be dependent on your expectations. As I mentioned, if you need it, let's say as a contingency fund, then you cannot put into equity, right? And if you need it for your retirement, let's say I am 25 years right now, and if I want to build a corpus when I retire, let's say at 60 or 65, 35 or 40 years down the line, then definitely I'm gonna go all into equities right now, and maybe I glide my path towards that when my age comes closer to retirement. So that is how I view this. Then, and it has to be, as I mentioned, linked to an individual scenario.
Okay. You know how you explained that one? It is almost like butterscotch and vanilla.
Right.
As simple as that.
Right.
You are not allowing any thought of in between bringing in kalagata or some exotic ice cream which we generally don't understand. But then okay, chalo try kar lete hain.
Right.
No. So you made it sound so simple. If only all my investors had that gumption to understand what is this risk all about. Taking risk is entirely different thing, and then leaving with it to gestation, which is predominantly the first thought that okay, this is for a period of time that I need to invest, and then see see it fructifying, which you just very easily put it, and you said that glide down your risk. Wow. Kudos to that. Really, really very interesting thought process there.
Thank you. I would just like to add one thing. So, obviously, it has to be according to the expectations of the investor, but at the same time, we need to teach or educate the investor that there are when we talk about risk appetite, there are two aspects. One is your ability to take on risk, and one is your willingness to take on risk. In the last 4 to 5 years specifically, I have seen people's ability, willingness to take on risk has magnified exponentially, even though their ability has not increased, or it wasn't there.
It wasn't there. I generally say it wasn't there because I'll bring one of the conversation that I had yesterday with a Bangalore-based IIT, and it did not go well. I must admit that. He questioned me about people investing into theme-based fund. I don't want to name the theme. So his contention was he quoted a particular theme, and he said, "Mr. Antony, should I give you companies that went belly up?" I said, "You don't have to. I know the companies which gone up, in couples."
Right.
So, but then, so how can you say that the last 10 years? This particular theme generated profit, and I said I have the data. So he was not letting me go. He said, okay, you share me data, then I will talk to you. So his contention was stick to some vanilla funds. I said, yes, of course, you're supposed to do that.
Correct.
But then my investors have a risk appetite from different from every individual.
Right.
So I generally try to understand how much risk you can take.
Correct. Your ability.
Your appetite could be different, your ability could be different, and you need to put all of them together and consider your risk appetite. Otherwise, like you said, your ability is good, but you still end up on the negative side of the market or the wrath of the market, because you did not calculate it wise.
Correct. Absolutely.
Okay. So,
just since you mentioned regarding the thematics, so just like to add a point, very, very decent. Most of your viewers would also, I think, connect with that. So last 2 years, FY 23-24 and 24-25 till date, about a month to go yet. So we've seen more than 60 NFOs into sectoral and thematic,
Yes.
and how much amount of money they've collected, more than 1,50,000 crores of assets they've garnered through these NFOs. And in the last year, only 40 plus NFOs were launched in the thematic and sectoral space. And if you look at most of those NFOs, right, from January 2024, I'm looking at it from a calendar year point of view, but if you look at it from January 2024, then most of these thematic or sectoral funds have a drawdown of more than 10%. I think, if I'm not wrong, I viewed that data a couple of days ago, around 36 to 37 out of 40 are having a drawdown of more than 10%.
10%. Yeah.
So I just wanted to add this point, because most of the investors, they get swayed away by those platforms or through some influencers or social media and all that. This is the kind of very, very exciting fun, very exciting,
Exotic also.
very exotic, very exotic.
Exotic. Even after not having the ability or the gumption to take it, people end up there.
Absolutely, absolutely. But they have to understand the risks. If they want to go into a thematic, then they need to know those risks very, very well, and should be ready to, bear a very, very steep drawdown in a short period of time as well.
Nirmay, you have approximately 40,000 odd partners?
Yeah.
Yeah, IFAs, independent financial advisors. How do you teach them? How do you part? Because I know most of them are double your age.
Yeah.
Most of them have their own attitude and they carry a lot of luggage. So it is probably very difficult.
So yeah, I mean, there are more than 40,000 active distributors in our NJ Wealth fraternity, and I obviously have not been able to interact with each and every one of the 40,000 distributors, but I try to, interact and give presentations to as many other MFDs as much as I can. And obviously their age, most of them are twice the age that I am. I am 25. Many of them are at least 40, 45, 50, 50 plus as well, many of them. So, but whenever I'm, talking to them, educating them, I do know that most of them, they do have an experience equivalent to my age. So I don't have to regurgitate those same things again and again, which they already know, right?
Yes.
When I go and talk to such a distributor who's that experienced, I need to add value to his or her knowledge.
Yeah.
And that I tend to do through the learnings that I have got, the research that I have done, that is primarily related to the asset management that we've been doing, specifically the rule-based investing, the research that we've been doing.
Yes.
There's innovations in this facet that are taking place, not just in India, but across the world. How the industry is evolving, how the preferences of investors from traditional active to such kind of strategies are evolving across the world. What are the merits of such strategies? So most of my education, most of the trainings rather that I do for the distributors is related to the rule-based investing, our investment process. So many of them, they are intrigued to know about how NJ manages their funds, right? So, and that is something where I can add value to them as well. So that I feel is an area where even if a distributor is definitely very much experienced, has seen multiple cycles in the market, but they would still be, willing to learn more about our products, about these new and emerging ways of investing. And I believe then there is another set of distributors as well in the NJ fraternity that are very new distributors, because we keep on recruiting a lot of distributors as well, right? So I think last year roughly we recruited net about 6,000 plus distributors.
Such numbers.
Right. And every year the target is to keep on adding more and more distributors. So those people, they come from either LIC background or from some background that has got nothing to do with finance. So there I even talk about the basics of wealth creation, basics of mutual funds, what is cost averaging, what is SIP, and there they don't have that kind of luggage there with them as well. So they wouldn't even, judge के ये तो मेरे से आधे एज का है, ये मेरे को क्या and over and above that, what I feel is that even if someone has to judge, it is up to them, right? I can't do anything about it.
Even is prejudiced. They will carry that always.
And as long as I'm doing the right thing, I'm giving my 100%, I don't have to worry about that, and I have to continue to do my job. That's how I take it.
Okay, so that's a very beautifully articulated that you tend your services to people who have been in the industry as long as you actually lived. That's very scary when you stand in front of them and then talking about all these high funder jargon. They taking it and then throwing all out of their fancy ideas, especially uh, in this, my next thing that I wanted to know from you about particularly two sectors. One is the newly joined in the last 4 years, distributors who joined in NJF fraternity.
Let's say post-COVID.
Yeah, post-COVID, and then post-COVID investors.
Right.
Now, I wanted to know psychologically, how do they behave? Because there is so much of shift from the traditional way of advisory to techno oriented advisory. Because nowadays people, there was a time when people just talk about checks. Now it is all about UPI.
Correct.
And robot advisory, algorithm. These are all common words that they keep churning out. So how do you manage these two sets? The post-COVID investors and post-COVID advisors.
So post-COVID investors, what we touched upon briefly in the beginning as well,
Yes.
that exactly is their psychology. So most of them, they've, not seen any major corrections in the market. This is the first one that they've started to witness. So
Yes.
for them, that psychology is के equity में तो भाई 15-20% तो कुछ नहीं है, 30-40% तो बनने ही वाला है. स्मॉल कैप मिड कैप में मैं डालूंगा, माइक्रो कैप में डालूंगा. माइक्रो कैप इंडेक्स एक साल में 100% भी अप हो गया था. तो आई विल इन्वेस्ट इन दैट. दिस इज द काइंड ऑफ मल्टी bagger returns that I am looking for, quick money that I am looking for, right? And that is their expectation, that instant gratification. They don't understand the rule of 72. They don't understand the power of compounding. They don't understand कि अगर 15% पे भी मेरा annualized growth होने वाला है तो हर 5 साल पैसा डबल होने वाला है. They just want कि भाई मैं इतने में डाल रहा हूँ, मैं सपोज 10,000 रुपये इन्वेस्ट कर रहा हूँ, तो quickly within a few months or let's say a year or so, I want this much double return or whatever on my investment. That is their entire thought process. And not just, I would say, direct equity, that is the cash market, or all mutual funds. They are ready to take all kinds of risk. So we have seen that in the past 2 years, FY 23-24, and you compare it to FY 21-22, you see the number of F&O traders that have increased in our country. They have more than doubled. 2 साल पहले, the number of F&O traders were about 43 lakhs. Now it is 86 lakhs से ज़्यादा. And despite the fact, despite SEBI's statutory warnings that yes, there is, the F&O traders have made a cumulative loss of more than 1.8 lakh crores over this 3-year period.
97% of them made losses.
93% have made losses. 93% have made losses. 91% have made losses in FY 23-24 itself, and tens of thousands of crores they're paying in transaction costs, but they don't care. Majority of them, 94% of these people are having an annual income of less than 10 lakh rupees.
Oh God, how scary.
अभी आप सोचिए. So this is the psychology that they have. They don't understand asset allocation. They don't understand compounding over a long period of time. This, obviously, there are always gonna be exceptions, but this is the majority of the perspective. And it is not just people of my age, I would say, rather people across all age groups are having that greed, because it is something, very, very natural to us, that vicious cycle of fear, greed, and growth that we put in investing, right? This is a prime example of that. And those investors who just entered, they've not seen that down cycle, right? So for them, it is just that euphoria and greed that kicks in.
Yeah.
And it's now coming to the distributors. So in terms of distributors, well, I think many of the new distributors that are joining, they're quite motivated. They're motivated for multiple reasons, because they get to know that there's this business of mutual fund distribution, which is a very asset-light business, which does not require a lot of, capital investment, which can after a couple of years of hard work, we can get a good regular stream of income flowing in. And they also see that the markets are growing, people are becoming more and more aware. AMFI doing the mutual fund sahi hai initiative, and creating awareness regarding
The atmosphere is very good,
the
basically.
atmosphere is very good. They feel that yeah, we are in the right place at the right time, and that's what we all have also been teaching them, that yeah, this is the right place to be at the right time. However, many of them may also be kind of a bit skeptic that
It is.
and it is natural.
It is very natural.
It
Very
is
natural.
very natural. But I think that is the point of time where you need to handhold them. Many of them may be skeptic about, as you rightly mentioned, regarding robo advisory or platforms, and the direct plans and all,
Yes,
teaching it, and how to tackle all those points. But that is again something which is not just a phenomenon that is with the new MFDs, but even the many experienced MFDs,
yes.
also partners, they do get kind of worried about that.
I often encounter that.
Right.
Yep. Especially the new set of influencers and robo advisories. They tend to teach the client that everything is hunky dory. It is just DIY stuff.
Right.
But technically, it is not. So this
Absolutely
is something which I continue to inculcate a habit of knowing the advisor first.
So
And then it
before a couple of days only, I was taking a webinar, and I gave this example that a mutual fund distributor is like your gym trainer, is like a financial coach, right? Doesn't matter if you're a novice bodybuilder or an athlete, or if you're competing in Mr. Olympia, which is the most elite bodybuilding competition. They do all have their fitness coaches. They do have their gym trainers with them. Why do they need? Why they have all the knowledge, they have all the requisite knowledge in everything. They can train themselves on their own, but they keep their mentors. They keep
the
their
battery of advisors actually.
Exactly. It's a whole team of advisors and fitness coaches, so that they maintain their composure and their attitude when they have to do make their composure in the most critical times. And that is what an advisor does as well, right? A financial advisor.
Okay, so that's very, very, very nicely put it. So you too have an advisor, if I may ask you?
You may be thinking that I don't need an advisor. Sometimes even I think myself that I know most of the things. I know the basics of compounding and all, and I am not gonna take any abrupt decisions. Then why do I need an advisor? But then back of my mind, I again think about it, that ultimately I am also human, and sometimes what if things go wrong and I may take a wrong decision. That's where that person is gonna help me.
So you always created a checks and balances.
Right. Yes.
And you have a second opinion.
Yes.
Your opinions matters, but then of course you put it on someone else's desk and ask them, please vet my decision.
Yes.
And correct me if I am.
Absolutely.
Wow, wonderful, wonderful.
So as you rightly said, so even if I have gone through something and I feel that yeah, this is what I want to do with my investment, so I'm not just rightly gonna execute it. I'm gonna discuss that with my advisor, take his opinion, and see what he says, and then we'll unanimously take a decision.
Wow, wow. It's always a win-win situation, and something that I often tell my new investor is, I'm not looking at your starting investment with me. I am looking at the next 3 generations. Then they frown and look at me. ये 3 generation तक जिंदा रहेगा क्या? हाँ, probably not. But then my ideology, my vision, and my firm will stay put.
Absolutely.
Once SOPs are set. So this is something that most of the investors need to understand. When you create a relationship with a financial advisor, it should be for 3 generations.
Absolutely.
So Nirmay, I can actually share a very, very beautiful data with you. Today, about 30% of my investors are actually 3rd generation.
Wow, that is indeed amazing.
Yeah. So when they come now, something that is so touchy, and many a times it was also ended up in a tear jerk. They say कि पापा का भी तो आपने किया, तो जैसे किया वैसे ही कर लेना. Then I go back and check. Oh, grandparents भी हमारे पास ही थे. So this young lot, it is a culture that is created at their home,
Right.
the dining tables.
Correct.
So
That is very, very important.
yeah. So once that culture is set in place, then the advisor, the doctors and the lawyers are looked up with respect, because
As a part of their family, actually.
yes. So I many a times I proudly tell people कि यार bedroom stories मुझे पता है. I'm privy to a lot of stuff because I am part of their family, and more surprisingly, they tell me with 100% conviction that it stays with me, and it's always stayed with me, and that's a kind of relation I created. So third generation walks in very easy. They're very comfortable. Okay, uncle dekh lega. So my team is also very happy to handle them. So at what age you actually started your investments?
So I think I made my first investment at the age of 13 by myself. Prior to that, my dad had been putting money in my name since I was, I think, 4 or 5. I need to check with him actually, but I know when I was a very little boy, since that age, he's been investing on my name. So yeah, I had no clue about that. But once I started understanding, I put some money in SIP. And I remember initially when I was 13, 14, I did not have any source of income.
Okay, yeah, you were still a schoolboy.
Absolutely. But I used to get a lot of money on my birthdays from my relatives and all, or my other family friends and all of those people, and my dad used to tell me that put some money into your funds, and that's how I started inculcating that habit of putting some money from those gifts that I used to get into my funds, and that's how my corpus.
Man, how did you create the delayed gratification? आजकल की generation 500 दिया तो 500 5,000 होना चाहिए क्योंकि 5,000 में मेरा पार्टी होता है. So how did you and you are absolutely.
I'll be frank, उस टाइम पे देखो मुझे जो चाहिए था वो मिल भी जाता था एंड ये भी मैं कर लेता था. So it was like a win-win for me at that point of time. But now if I get any kind of such money, then I will obviously be very much happy delaying that gratification, because I know that the value of that gratification is going to be much higher than this instantaneous gratification that I'm
Again, you are applying 72.
Yes, absolutely.
Okay. Nirmay, we spoke a lot about NJ, which is an abbreviation of Neeraj and Jignesh, right?
Right.
Extremely colorful personalities, and Neeraj is your father. If I can ask you very candidly, what are the lessons that you actually learned from your father as a son and then also as a director?
Okay. I think most of the things that I've learned as a son are the same that I've learned in business as well. So most important one would be that in any facet of your life, be it business or sports or your academics or overall career, you have to be patient. Patience is the ultimate, and even in investment, obviously, because what we talked about, that takes a lot of time, that delayed gratification. But patience does pay off long way in the long term. So, and it pays off heftily, but for that you have to be composed in the short term, make a lot of sacrifices and go through that pain in the short term. I know right now I'm saying that and it's easier said than done. I myself have experienced the same, but with time, definitely with the passage of time and being with the right people, that is another lesson that I learned. Be with the right people who you associate yourself with. The company matters. Your company matters a lot, and that's what my dad taught me a lot as well. Not in business and when I was a schoolboy or when I was in college as well. Those were one of the most important lessons, and I think the other lesson would be about integrity. Always be honest. Doesn't matter if you make a mistake, but be honest. Just confess that you made a mistake. Nobody's gonna penalize you forever. People are gonna understand, but don't lie unnecessarily. Be honest, and that integrity is one of, I think, the main things that makes NJ stand out among the rest of the players as well. So that I think those are the main three lessons that I've had from my father.
Okay. So at a very young age, you've been handed out a huge responsibility. Generally, people reach this kind of a very, focused or under the limelight at their 30s and 40s. But in your mid 25s, you are already with huge responsibility. So how do you balance this professional responsibility and personal growth?
Right. So when I was handed the responsibility, it wasn't something that all the responsibility came to me in a single point of time in one shot. It has come gradually over the years, and
But you knew it.
I knew it that eventually it has to, maybe not, if not right now, then couple of years down the line, but it has to come, and I was ready for it. And the only thing that I mentioned initially was that I was not how clear fully how well I'll be able to manage it. But then once I did my education in this field and learned did the CFA as well, so I gained a lot of clarity and confidence that no, this is something that I like and something that I want to do for the rest of my life. And that interests me a lot, that motivates me a lot. So I don't view that responsibility as a burden. Definitely back of your mind, no matter who the person is, but you're always gonna have that burden, but you have to take it positively. And that's how I've been doing. And the other thing that my father taught me as well was that don't think about what the other person is gonna think of you, right? Just what I also mentioned earlier, that think about your job, think about what you are supposed to do, and try to excel at that. Then just don't be bothered about how that other person is gonna judge you, and so on and so forth. So that's something that I keep on reminding myself as well, because that is very, very important, because ultimately that is gonna drive your character and everything. So that I feel is one of the most important things, how you can deal with responsibility as well. And obviously seeking help. There are a lot of people there to help you, and there's nothing wrong in taking help whenever it is required to.
Okay. Oh, so that means you gelled well with the entire team of NJ management.
Yeah.
Yeah.
So I knew a few of them since many years, even when I was not in the business, because obviously I used to visit the office many times, and in other occasions also I used to interact with them. But obviously over these few years I've interacted with people from the different organization, from the different functions in the organization, and that's how naturally I've developed that camaraderie with most of the people.
Okay. Okay. So you knew that eventually, it is not only about your professional responsibility, the personal growth will also.
Absolutely.
So how much you dedicate yourself for your personal growth?
So to be frank, the last few years I got so engrossed in the business and taking on the responsibility and all, that I've put very little time for my personal growth. I'll be frank, but now I've realized that that is also something equally important. And I love playing sports. I love playing table tennis.
I know that. I know that.
So
you play with your father, right?
Yeah, I play with my father. I play with my coach as well. So
Okay.
And a couple of other people. So I love playing that sport. So now I made it a point, and my father as well, that we have to play table tennis at least twice a week, no matter what. Come what may, we have to play twice a week. So
that's
we
wonderful.
ensure playing that. And recently I've started playing pickleball as well. That is
Oh yeah, that's a new one.
that's a new
yeah.
sport, very interesting sport, my new hobby. So that also I try that. I play at least a mix of pickleball and table tennis at least 3 times a week. So that's how I try to spare time for myself, and obviously reading as well. Most of the nights before I go to bed, I try at least reading 5 to 10 pages.
Yeah, that goes with me as well. So I not before going to the
And I obviously have to start working out again as well. That is something I have been telling myself, pushing myself, trying to push myself, but haven't executed it yet. But I'm sure.
you will get there. You will get there too, because it is about the habits. So you have a habit of creating habits. So I think you will definitely get there. Nirmay, when you took over as the director of NJAMC, I came to know that you have developed a research team, and also something called very fancy name. It is Smart Beta,
Right.
and it's an algorithm-based proprietary
The platform that we
platform.
created. Yeah.
So can you just tell me how did that idea came into you, and how much you devoted for creating a system which can derive
Portfolio.
portfolios, and also exponentially mitigate risk and create alpha?
Right, right. So before I move on to Smart Beta, I'll just give a background about how we operate as an asset management company.
Oh yeah, wonderful, yeah.
So NJ Asset Management is completely into rule-based investing. So if you look at our tagline as well, it's built on rules, right?
Yeah.
So what rule-based
It was built on trust to build on rules.
Right.
Yeah.
Absolutely. So keeping that aligned, we put it built on rules.
Yes,
So
yes.
it goes on with the group overall as well, philosophy and the tagline. So yeah, rule-based investing, as the name suggests, is a way of investing where, as a fund management team or as a team of research guys or investment professionals, we are not taking any discretionary decisions. We are not trying to forecast or predict what stock or what sector or what theme is going to do well in the next few months or the next few years, where that alpha is going to come from, whether renewable energy is going to be the big thing in the next few years, or whether EV or semiconductor companies are going to be, or AI is going to be a next big thing. We don't try to, take such kind of forward looking calls. Rather, what we do is that, and this is what generally the traditional discretionary active investing or active
You
investing
reduced
in-
predictions.
Correct. That's what they try to do, right? They have a team of research analysts who research on different sectors, and they cover different stocks in that sector. Some may be covering, let's say, IT, some may be covering pharma, some may be covering telecom, and so on and so forth. And then they're gonna give their recommendations, deliberate on it, give their recommendations to the fund manager that this is the kind of company that I feel we should put more money in. Yes. The fund manager may also do his due diligence. He may speak with the promoters, the managers, and then take a call on the portfolio, right? When to buy, when to sell, how much to allocate, and so on and so forth. So that is the traditional way of investing. As I mentioned, we are not into that. So unlike this traditional active investing, how we operate is we have created an entire repository of data. And when I talk about that, it is the data of all NSE 500 companies. So Nifty 500 index, which is an index of the top 500 companies based on market capitalization, which roughly includes the top 100 large cap companies, the middle 150 mid cap companies from 101 to 250th rank, and the 250 about largest small cap companies. So that is an index of 500 companies, and since its inception in 1995, whatever company that ever came into that index, so we have a repository of all those companies. That is roughly about 1232 odd companies that have ever been part of the NSE 500 index, and we have a huge data set of more than past 25 years for all their financial statements as well, their consolidated financial statements with one standalone financial statement, which is nothing but their profit and loss account, their balance sheets, their cash flow statements, and also the market data, their prices, adjusted prices, their dividends data, their volumes data, and so on and so forth. And using this repository, we have created this entire platform called the NJ Smart Beta
Colossal amount of data that you're talking about.
and trust me, it is very challenging to deal with data in our country, specifically going back in time, like adjusting for all the corporate actions, adjusting for all the changes in accounting standards, to make data meaningful, to make comparisons meaningful across time, across companies. It's a colossal effort, definitely. And for that, we actually have a 2 people dedicated team that just does data audit. It's the most mundane job, I would say. But it is the most important job for us because that is the raw material for us.
That's probably the foundation that you create, right?
Absolutely. Because we use this data, then we've created this platform called the NJ Smart Beta platform. And through that platform, I can create any sort of rules. And when I say rules, the rules are related to a portfolio. So when I say rules, I'm going to put a few inputs. And those inputs are going to be inputs right from my universe of stocks to how I'm going to select the stocks in the portfolio, to how I'm going to weigh the stocks in the portfolio, how I'm going to rebalance the portfolio, how I'm going to, enter or exit from different stocks, and how I'm going to do the profit booking. Everything what a fund manager does, maybe based some of it based on his discretion. Here, everything is based on those inputs, and those inputs are nothing but rules in this parlance of rule-based investing. So that is what this platform does. It's a beautiful platform. After integrating all this data, I can put any kind of rule. Let's say I'm watching an IPL match, right?
Okay.
And there's an innings break, and I get an idea that I want to create a portfolio of 20 companies. I want to select the top 20, the 20 companies based on, let's say, their free cash flow yield and their 9-month price momentum. Just giving a random thought that just came to my mind right now.
Right.
Let's say that came to my mind while I was watching the IPL during the innings break. Let's say, and I want to select those 20 companies from the top 250 companies based on market capitalization. I want to rebalance the portfolio, let's say every 3 months, and give an allocation based on the momentum of those stocks. Totally currently stocks there portfolio. So that is just a set of rules that I mentioned, right from the universe of 250 companies to the portfolio size of 20 and the rebalancing frequency and the rules of weighing. And that is just how simple I can test a portfolio on Smart Beta. I just have to open the platform, have to go to the backtest portfolio module, select a couple of options from the drop down menu, press the submit button, and by the time the next innings will start, all the portfolios, all the NAVs for the past 15-20 years will get generated, and I'll get all the data for whatever kind of analysis that I want to do. If I want to compare how the portfolio performed in the different market scenarios vis-a-vis the rest of the schemes, vis-a-vis the indices, what kind of stocks generated the alpha in the portfolio, which were the laggards in the portfolio, what has been the sectoral exposure in the portfolio, what has been the churn or the turnover, portfolio turnover. All those things can be analyzed at my fingertips. So that is the beauty of this platform.
Man, you just took me to a wonderland. I felt like I'm sitting in a Disney world, and you said that's possible. You just take the band and you spill it.
To give a few numbers regarding the platform. So right now we have a 50 stock portfolio for NJ Flexi Cap Fund, but that 50 stock portfolio, the rules that define that portfolio have been devised after testing more than 10,000 different rules, set of rules. 10,000 different strategies have been tested, more than that, all thanks to this platform. The beauty of this platform, like the IT team, I would say, has done a very, very phenomenal job. They've created this platform from scratch, and thanks to them, that whatever kind of idea we get, we can dynamically backtest it.
Okay, so if I have to summarize this, what you have done is you reduced human error and also reduced margin of error, even if there is a team looking into a portfolio creation.
Absolutely.
So that is all about Smart Beta.
Absolutely. So as you rightly said, so we've eliminated that human error from the investment decision making. So the example that I give you regarding that 20 stock portfolio, let's say if I like that strategy, if the investment committee liked that strategy, and if we were to deploy actual funds based on that strategy, and now let us say one of the stocks that comes in that 20 stock list is not that one of the stocks that my fund manager likes, then even in that situation, the fund manager cannot take any discretionary call. Oh no, we don't want to buy this stock, or I don't like this promoter. No, neither me nor the fund manager nor the chairman of the investment committee has the right to take such kind of a discretionary decision. So that completely eliminates all the human biases.
Yeah, so emotional impediments doesn't exist.
Absolutely.
Wow, that's a very wonderful thing to know. So this is what exactly happens. And so, how did you, from a traditionally run business to a technologically advanced platform, how did that transition?
Right. So initially, when my father launched the asset management company, he was also of the opinion of doing something in the rule-based manner only. He had gone to the United States before a couple of years, attended a couple of conferences. He understood the advancements that were going on in asset management back 5-6 years back in time in the US, and he was very much convinced that no, this is something that is very different and unique, and nobody is doing it in India. And when he shared that to me, I was also fully convinced, because that was precisely what I had studied in my CFA, in my bachelor's as well. So I could resonate a lot with that, and it made a lot of sense to me. And I was very clear that, yeah, this is the path that we have to take in the asset management business ahead.
Yeah, that's true entrepreneurial mindset. So your father actually became your torchbearer, and you ran the entire marathon.
Obviously, he is still there, and his support is in there, absolutely. And it's not just me, but the team, the entire research team that we have, they are all doing a phenomenal job, and it's a team effort ultimately.
Okay. So we actually covered a lot of subject. At this moment, if I ask you, how successful are you?
Well, that depends on the definition of success. For me, success is being, I think, happy and having a peace of mind. And in terms of being happy and having a peace of mind, I would say I'm quite content with myself. But having said that, when it comes to being content to a point that you become complacent, no,
Okay.
not at all. Because in
So
terms
you're not satisfied, but you're content.
Absolutely. So, but I never look at success in terms of, numbers or growth. I feel that those are the byproducts. You have to keep on doing the work, keep doing the same thing, keep becoming better. And if you're wanna become better in the process, definitely, and enjoy the journey, then definitely those numbers, everything is gonna come along the way.
So if on those lines, 25 years from now, what kind of a identity you wanted to leave here?
Again, see, in terms of numbers or anything, I wouldn't say, because those would be the byproducts. So at this much growth is done, or so on and so forth. That is not the kind of identity I would want. Rather, an identity that resonates with someone who has actually made a meaningful impact on the lives of multiple people, like you yourself and most of the NJ partners, and including my father and his business partner, they have done together. So similarly, I would want to continue that legacy and touch upon the lives of as many people as I can. That would be an identity that I would want to live after a couple of years. Yeah.
Oh yeah. Oh yeah, that's a couple of years. So probably I'll consider that as couple of decades probably. So you have a long way to go, because we would like to see you at the end of this.
Absolutely.
Nirmay, it was indeed a pleasure to know the kind of work you have done behind the scene, which probably most people may not understand. The data that you have crunched to create a platform like this. So if I may know, where do you place yourself among, no, 3 dozens or more AMCs in the market, and you are a newbie?
Right, absolutely. So that's a very, very pertinent question, I would say. And we've just completed about 3.5 years in the asset management space and 40 plus AMCs to compete with. So that's a lot of competition. We're seeing new players coming in, new and new AMC licenses giving out to play, other asset management companies. So definitely it is gonna get tough. It is tough at the moment, but we feel that we are positioning ourselves very, very differently. Although there are 40 plus asset management companies in the market, none of those AMCs are completely into rule based investing, right? So that is why that tagline of built on rules is very, very important. That is one of the main USPs or the unique selling propositions that we have among the players. So as I explained, most of them are into active investing, while we are completely into rule-based investing, be it any of our mutual fund products, NJ Flexi Cap, NJ Balanced Advantage,
wonderful.
or NJ ELSS, or even on the PMS side, are completely gonna manage in this data-driven fashion. So that definitely gives a very, very strong point of diversification. If an investor today has to allocate his basket of funds, let's say between a couple of funds, then he can choose between a style diversification between an active fund and a rule-based fund, or you call it quant or smart beta or rule-based or factor-based. Those are all the different names, but that style diversification between active and rule-based is very, very important, and that's where we come into the picture. So rather than just competing with the rest of the AMCs, it is like a complementing the rest of the AMCs, like in terms of diversification. Over and above that, our funds are very, very uniquely created. The investment process that we follow completely stock agnostic, sector agnostic, index agnostic, and industry agnostic, and even market cap agnostic investment approach. We are only focused on quality, the fundamental quality of our businesses. So all our portfolios, if you see, are high quality in terms of their fundamental attributes such as profitability, their cash flows, their dividends, their debt to equity, like the solvency and the liquidity of the companies. Like fundamentally super strong businesses we aim to hold. And in doing so, the outcome of this is that the portfolio that we've created is a very unique portfolio. It just has an overlap of about 15% or so with the index, and about a 12-13% overlap with the rest of the flexi cap funds or the rest of the other active funds that are there in the market. So this also, from a diversification standpoint, gives a lot of benefit, a lot of advantage to the investor, because if he's getting a portfolio which is unique, which has a very different underlying, and it is rule based and quality focused, then definitely it is going to help them over a long period of time.
Yeah, that's really very, very well put it across. So you technically reduced a lot of clutter,
Right.
and you also reduce the circus which actually happens in the industry. So how come you are restricted to 3 or 4 funds?
Right. So again, a very pertinent question. So we have very, very consciously taken the decision that we are not in this business just to, blindly gather assets.
No rat race.
No rat race. We are very clear. Obviously, we all want growth, but it cannot come at any cost. We are very clear. And in doing so, we are clear that we don't want to launch a lot of NFOs, which we don't even understand, right? There are so many different kinds of products out there. Most of them are not of much use to the investor. They may be something that the investor may be wanting, but actually that is not something that he needs. We feel that a couple of products such as a flexi cap or a balanced advantage fund that is similar for an investor who wants that equity flavor but with a lesser risk. So that serves that purpose as well. And if someone wants to go with a more concentrated, aggressive approach, then they can go with the ELSS fund. So we feel that these 3 funds right now more than enough for the investors. They are more than enough for the investors' needs rather than their wants. And that is what our overall thought process is, that even if we launch a fund, we'll only launch it if it is actually gonna be meaningful to them in the long term.
It adds value.
It adds value to them.
Yeah, so it should not be over, like you earlier said, it should not be overlapping with the rest of the funds in his portfolio, but it stands out and gives him more or less a complete peace of mind and also step-by-step growth, because it never happens in the industry that you start something and you will see tremendous 10x or 1x growth or 2x growth also. Forget about 10x growth. But step by step, it is possible. To that, what will be the message you give to the youngsters who are presently troubled looking at the negative cycle? What you wanted to tell them?
Well, my basic message would be very, very simple, that wealth creation is not through a couple of months or investing through a couple of months or on maybe a couple of years. It's a matter of a lot of years. It's a long-term process. It's not just that, you invest right now, you invest in a few multi-bagger IPOs or a few stocks, micro caps and all, and you're going to make a lot of money. And that's not wealth creation, right? This correction is a part and parcel of wealth creation. And if you've invested for the long term, which is the right way to invest, what I explained as well, that the probability of loss diminishes exponentially, substantially diminishes as your holding period increases.
Yes.
And if you want to invest for the long term, if you really want to make money, and you have to invest for the long term, compounding is not going to work overnight. At 15% is not going to help in a couple of days. It's going to take a lot of years. And for that, you have to remain composed, remain calm. As long as you've invested in the right places, be sure that you've invested in the right places. That is very, very important. Just check that whether you invested in the right asset or not. And as long as you invested in the right asset, stay calm with the correction. It is just a matter of time. With the passage of time, as the fundamentals will bounce back, it will rationalize, and ultimately you are gonna get that kind of benefit of compounding.
Yeah, that reminds me of one of the very old advertisement. I think it is probably Hero Motocorp, which said, "Fill it, shut it, and forget it."
Absolutely.
Yeah. This is supposed to be the practice of investors. Rather than
Don't look at your portfolio every single day. Don't look at how the NAV fluctuated or the share prices fluctuated. Just forget it. That's it.
Okay. Nirmay, it was such a pleasure. It was indeed a pleasure knowing you and understanding your in-depth knowledge about the industry, distribution system, and more importantly, about how you are managing a new age system called smart beta, how the concept of smart beta has actually come into place. So this is a beautiful narration about NJ from the second generation I heard. And I'm so pleased. And thank you so much. It is a pleasure meeting and being with you.
Anthony, as well. It was indeed a pleasure for me as well to be on your podcast, share some of my thoughts and experiences did for the first time, but it was indeed an amazing experience.
It did not look like a first time. You were like a pro and you actually nailed it, and it was such a pleasure.
Thank you. Okay.